Welcome back to Mastering Options Trading. So yesterday night I had put a post right on community tab saying that Nifty target of 22,750 by second before 2nd February 2025. So this is the mega prediction that I'm doing here. Today's date is 14th December, right? And currently Nifty is at 24,768, right? Now it takes a lot of courage to say these things like 2000 points fall and all. It's not a clickbait wherein I'm ensuring just viewers should watch. It is a serious analysis. Just like last time I had predicted, if you remember, a 2500 points crash in 100 days, right? This was in September, right? So after that, you saw in October what happened. Nifty fell from 26,277, right? From this top, it came up to 23,263, right? So clearly, we could see 3,000 points fall. At least I expected a 2,500 points fall, right? So this time again, I'm saying another 2,000 points fall, right? Every analysis, every number that I say, at least in my channel, is always logical. It's not just out of emotion. I say now it's 25,000, now it's going to be new all-time high and all. So we'll discuss one by one, right? Now, first and foremost, I always use at least 2 to 3 confirmation factors for my analysis. One of the main factors, if you go back and watch that video, right, wherein I predicted the 2500 points crash, there clearly I mentioned that on a monthly time frame, I'm expecting a certain moving average to be tested, right? The same thing is still pending, and currently it is at 22,500, 22,250 at the moment, right? We'll keep that number aside. Not only that, I have done one more analysis. I don't want to show the numbers now, but basically, if you, I have done an analysis on December to January, right? So what is the analysis say is, let me show you one example, right? Let's go to 20th of December. What happened, right? 2023. Okay. If you see from this point, 20th of December, basically till I have considered 30th of January as my target date, right? 30th. So in this entire range, right, you would have seen 10% moves on in total from high to low. If you consider, it will be on an average of 9 to 10%. This data I've tested for last 15 years. Very interestingly, you should remember this particular date, 20th of September or 23rd of September. Whatever is the high or low that gets formed in the market, that will be very crucial in providing the direction to the market. For example, if you see, the low was formed on 21st of December. From there, if we see 30th of Jan, right? So clearly it has gone up by 3.5% or 742 points. This is 1 year, right? Now let us take one more year as an example. I will not show all 15 years here, but I'll show a few examples. So this is the 22nd December, right? So 21st was holiday. So let's take 22nd December, right? From there, what is the target date? 30th of January, right? Let's see 30th of January. If you see, what is the percentage here? 5.58% from here to here, right? So, or 1030 points is what it is indicating. So, what I'm trying to say is, on an average, whatever is the high and whatever is the low, if you consider the momentum, it is around 9% in the last 15 years, right? So again, as I said, it is for 15 years data that I have seen. Overall, what I feel is basically from 20th or 23rd of December this year as well, by January 30th, I'm expecting whatever is the high form or whatever is the low form based on the candlestick structure, we can predict the target. In my opinion, because the moving average is pending to be tested on a monthly time frame on the lower side, so adding both the analysis, I think market will fall 2000 points. Now, where is that 2000 points from? What I'm thinking currently is basically if you observe where is the current key resistance for now, right? So key resistances, there are two key resistance. One is around 25,200 level. So another one is around 24,950 level, right? So whenever market goes between 24,950 to 25,200, this range, right? This range of 250 points, my plan is to wait for a bearish pattern or a bearish candle, and then I will short for the market. Right? As I always say, any view, market view should always come with a stop loss. So either a single daily candle closing about 25,200 or 25,300 approximately, that will be my stop loss. Now, what are the important things to remember? We should see what is happening on 20th of December. It's a very good chance that one big candle is possible if market goes higher side in the next 2 or 3 days, right? Then we can expect a big bearish candle either on 20th or 23rd of December 2024, right? If that happens, whatever is the high, approximately that high plus 1% should be the stop loss approximately, or simply take 25 200 to 300 is the stop loss, is what I am planning. This is not a recommendation to anyone. It's not a trade recommendation, definitely not, but I would like to take a trade around that area, and my target will be three targets basically. One, whatever is the breakout here, which is around 23,960, this is my first target because swings are to be considered target. Second target is 23,263 will be broken, and my final target will be anything below 23,000, or let's say 22,750 only, will be approximately my third target. So this is first target, this is my second target, and this is my third target. First target, I'm very confident it will come. I don't have any doubt. Second target, very, very likely. Third target will be where I will consider that my prediction is 100% correct. Okay. So all of these are possible using moving averages, and typically what happens on December 20th to 30th of January. Now, how many number of days are left? Approximately 50 days, or around 35 to 38 trading days are left. So we will see how it goes. Without fail, do like, share, and comment. If I get 60 comments or more, then only I will continue this kind of analysis. Else, I will not continue this special analysis. Right now, apart from what I said on the chart, right? If you see the 30th January option chain, why does 23,000 PE has highest open interest? That also you need to think, right? So why not, if Nifty is at 24,768, they could have shorted 24,000 PE, they could have shorted 23,500 PE, they could have shorted 24,500 PE. Instead of all of this, why 23,000 has highest change in open interest is something you need to think about, right? I'm not saying that just because it is highest open interest it will fall, but I'm saying that in line with our analysis, that is indicating some, that is giving a hint of possibility of 23,000 in the coming days, right? So overall, I know that I'm not showing you the actual numbers, but this is my analysis broadly, and I may be wrong, but generally when I've done a lot of groundwork, I'm always confident about my analysis. So I will definitely take a bearish trade, and I'm openly telling that. So somewhere around 24,950 to 25,200, I'll wait for a negative pattern, especially on 20th of December. If it happens, I'll take a very small 100 200 point stop loss as my trade, and then look for a 1,000 points or 2,000 points trade. Now, one question you may ask is, will I short 23,000 call? The answer is no, because it is deep ITM. So deep ITM will have very little theta decay or time value. For that reason, my initial plan is either 24,000 or 24,500 PE. Sorry, CE. I will short one of these, and as and when market moves down, I will keep shifting my positions downside so that I get a chance to eat theta decay. And by any chance, by mistake, if market shoots up also, I don't end up losing more money. For that reason, step by step I'll be shorting the positions, right? So this is my analysis for the next 50 trading days, right? Now I'll quickly cover the analysis for Monday. I'm not sure if I'll be able to make another video, so I'll quickly cover the analysis for Monday. Now, for Monday, if you see on a weekly time frame, it is like an inside candle. Whatever was the last week high and low, Nifty has moved only within the same range. So it's just an inside candle. As of now, looking at the weekly chart, we cannot say there is bearishness. There is no bearishness in weekly chart as of now. How can this chart become bearish? If it forms a red candle here, then green candle, a doji, and a red candle, right? That will indicate a bearish pattern. That is one possibility. Second possibility is market goes up but closes around the opening or the lower levels, something like a inverted hammer or a shooting star, then indicates a potential reversal. Two possibilities. Third possibility, it opens a very big gap up and then forms a red candle. That is a dark cloud cover pattern. So any of these three candlesticks are possible. If that happens, it will give a confirmation sign on a weekly chart. As of now, there is no bearish sign on a weekly chart. Right? Let's have a look at the Bank Nifty weekly chart. Similarly, Bank Nifty has also formed inside candle, and I know that it is very close to all-time high. Some of you might think that this must be a crazy prediction. Why would somebody dare to short when Bank Nifty is about to make a new all-time high? As I said, I have a lot of conviction in my analysis, and I will definitely short, but I will follow the stop loss theory. In case my stop loss hits here, right? I'll tell you that as well now. Again, I will, whenever it goes below 24,950, again I will look for a bearish trade second time. If two times also my stop loss is hit, then I will not take further trades on this, right? So I'll do one trade. If it hits a stop loss, no problem. I'll wait for a re-entry and then again take another trade. Now on daily charts, okay, I'll show you. Probably I have drawn the supports and resistances only on the 15 minutes. Anyway, I told you, right, 24,950 and 25,200 are the key resistances. Is there any bearish pattern on daily charts? Absolutely no bearish pattern on daily chart. What has it happened? It has been in a range and it is still trading in the same range basically. This is in case of Bank Nifty. Similar is the case of Nifty as well, right? If it had closed about 24,858 on Friday, then it would have definitely, we could have said charts are very bullish. But as of now, that much bullishness is not there, but it is not bearish also. You need to remember. Now let's have a look at the 15 minutes chart and then we will discuss the participants data and all, right. So yeah, so let's look at the participants data for Monday. So retailers have reduced some index future longs. So since retailers are going bearish, we take the opposite. It is a bullish sign. FIs have reduced their shorts, so that is also bullish. Pros have also reduced their index future shorts, so that is also indicating bullishness. Now, importantly, on options, so retailers, if you have seen, from just 77,000 call shorts, they have moved to 7,27,000 call shorts, right? So this could be one of the reason why market shot up that much on Friday. Two possibilities. One, retailers were going on shorting calls, and that's the reason the big players took the market up, or the other way around, market keep on going up, and then retailers thought every point as a reversal and market will fall further, and they went on shorting calls. Right? They have not unwound or booked their losses, so it is indicating a bullish sign on index calls. Right now, index calls of FIS, huge addition from 1,15,000. They've gone to 6,17,000, 5 lakh calls addition by FIS. Many of these positions could already be in profits and very well all OTMs, right? For example, 24, 500, 600, 300, 400, all of these OTMs would have turned into ITM positions. It would be working almost like futures for them. So huge money made by FIs already, along with pros who had call shorts earlier, right? So they have moved to call long. So clearly call segment is indicating bullishness. But only thing you need to remember is already they are in profit positions, right? The FIS and pros. Now let's have a look at puts. Retailers have added around 1 lakh put shorts, so that is bearish. FIs have added huge put longs, so that is bearish, and pros have added put shorts, so that is bullish. So here 2 out of 3 are indicating bearishness, but here the call segment is indicating bullishness. So it's kind of mixed. So what can happen? We'll look at the charts. I'll let you know, right? So let's have a look at the key levels on 15 minutes chart and then we'll discuss the remaining things, right? In case of Nifty, as of now, I'll show you on hourly chart. So 24,830 is the first resistance. Any closing above this will lead to 24,945 at least, right? On support, on 24,695, 24,580 and 24,500 are the key supports for now. Now, not only that, what to do in case of gap up, gap down and other scenarios, right? So basically, if it market opens a gap up, very likely it will fall. Market opens a gap up anywhere around 24,830 or above, especially, then it will fall. I will definitely look for a bearish trade, but I want a negative candle or a negative pattern formation here. Then I will look for a bearish trade. What about as of now, gift nifty? When I checked last, it is indicating 100 points gap down, right? So if market opens around 24,768 minus 100 is 24,668, then very likely what will happen is all of these people who have bought longs or right or calls, basically they will all panic. So initially it might come down and then give a reversal, is what it is possible. Or the yeah, most likely that is what we can expect. So basically it will go into a volatile mode if it opens a gap down, right? So bullish, I mean gap up trade, gap up, then I will take a bearish trade, right? Gap down, we will have to wait for the resistance to be broken, then we can take a bullish trade. And if in case it breaks 24,580 and the candle closes below this, then we'll look for a lower targets of 24,500, right? Any flat opening, I will prefer a bullish trade, especially after it crosses 24,830. Then we'll look at a bullish trade. If you observed on Friday as well, I mentioned my target as 80,700 in case of Sensex, that hit in the morning first few minutes only. Even on Nifty, whatever the levels I had mentioned, that also clearly hit because the data was bearish. After that, what happened around this area? As I said, retailers started adding huge call shots, thinking that now market will not go down further. Two clearly long lower wicks, right? One red candle, one green candle, and both are having long lower wicks. It simply indicated a support, and that's the reason market shot up significantly. Of course, I did not expect it to go to 24,700 and all. I thought a slight up move is possible till 24,350 and all, but it went way above that, right? Not only that, the RSI, if you observe at this level, again, webinar participants asked me for a live example. So you can go back and check the RSI at this level was 9, right? As I mentioned in the webinar, RSI at 9 is a short buy on a 15 minutes time frame. Whenever I see, I'll definitely close my eyes and do a buying because it is extremely oversold when RSI goes to 9 on a 15 minutes chart, right? Now, another important point, why did it take a support over there, right? That is very important to understand. So if I just show you the monthly chart, what is the closing price here? 24,131. What is the opening price? um, what is the low here rather? 24,074. So 24,074, and here it is 24,131. What is the low here? 23,900. And what is the opening here? 24,000. So if you see between 23,900 and 24,140, there are several open, high, low, close, right? So for that reason, even the current monthly candle, if you see the opening price is 24,141. So between 23,900 and 24,140, there is lot of support, and that's the reason it came till 24,180 and immediately shot up, right? So clearly on a monthly time frame, 23,900 to 24,200 is a key support for now. Anything below 24,900, the fall can be very fast after that, right? I hope this video is helpful. Especially, as I said, be careful on 20th, and 20th will decide the future market direction. And when I think the time is suitable, and if I see a lot of comments and likes on this video, probably I'll come out with the fifth open challenge as well. We will see that, right? I hope this analysis is helpful. Let's see the target as hit or not on February, before February 2nd, right? Please do like, share, and comment. Thank you all. Have a good day.